Okay. Just at the outset, look, I welcome the opportunity. I want to thank the House for facilitating this debate, as I believe it is important to give every deputy the opportunity to speak in the budget itself annually, in view of the fact that it gives them, as I said, time to raise issues that they have genuine concerns with, not only in the context of the national budgetary framework, but also on issues pertaining to more regional or local issues as well from time to time, which are important as well in terms of conveying views from their own constituency. I'd just like to say at the outset, Minister, that the budgetary framework, of course, is in the backdrop of a grave uncertainty. We all acknowledge that there is a disquiet out there in terms of Brexit and what will be unfolding tonight and tomorrow in Westminster and in Brussels, and also here in Dublin and Belfast. So clearly that is something that any government would have to take into account when framing a budget, and as I said, the uncertainty that could unfold from that. But having said that, there is also other issues that are affecting the broader international economy. You have the American First policy, which will equally and potentially have a profound impact on the Irish economy because of the location of a vast number of multinationals here in this country that are American anchored. So from that perspective, that equally is a headwind that we have to be conscious of, and we'd want to take into account in terms of formulating policy. We have a huge dependency on multinationals. It has been a template for the expansion of the economy for the last 40 years plus. It has been underpinned by successive governments in terms of policy. There's no doubt the 12.5% corporation tax is a critically important component. Of course, equally what's important is our access to the European Union as members of the EU, the fact we're English speaking, and because of our geographical location between the States and Europe itself. So there are many advantages where we are in terms of multinationals, and we have taken huge advantage of that in terms of the critical mass of multinationals that are located in this country, be they medical devices, pharmaceuticals, financial services, the Microsofts, the Googles, the Facebooks, and all of the major companies that are household names have large investment in this country. So from that perspective, the American First policy is critically an issue as well that we have to face up to, because long term we cannot take for granted that there will be continued expansion and investment of the multinational scene in this country because of changed policies in other jurisdictions. And that's why I think it is important, Minister, that we try and expand our own indigenous small and medium-sized businesses. We talk about ourselves as being a great country to set up a small business, great country to do business in. Well, if you look at it and assess it, it might be a great country to start up a small business, but it's not a great country to continue to try and run that business in terms of the costs that our businesses are burdened with, costs that undermine the competitiveness of the broader economy, but also the ability of small and medium-sized businesses to grow, to expand, and to operate in a volatile open market economy like ourselves. And we haven't been good at that, Minister. Even though we consistently applaud ourselves, the evidence is to the contrary. Access to capital is a huge problem for small and medium-sized businesses. Our pillar banks are dysfunctional at this stage when it comes to funding start-up companies. Dysfunctional. We now have Enterprise Ireland in the business of providing soft loans to small and medium-sized businesses. Traditionally, they would have been taking out equity in companies. They're now providing loans. You can argue as to why that is the case, but certainly I would have a suspicion that because of the fact that our pillar banks are no longer capable or able to assess small and medium-sized business plan, and also they've become risk adverse, completely risk adverse. So lending has dried up to that sector. And we will continue to pretend that it hasn't, but all the evidence there would show that it is. Our credit review group that is located in the Department of Enterprise or Business Enterprise and Innovation is toothless. It is incapable of dealing with this. Our central bank seems to be moribund and uninterested to say the very least, in trying to establish why our pillar banks are not in the business of actually lending money. Because they're not lending money, Minister. and they change short-term overdraft facilities to term loans. They pretend it's new lending. They're up to every trick in the book, as they have been for a long, long time. And I don't say that lightly or to be alarmist, but I've yet to meet business organisations, chambers that can say with certainty that our banks are on the side of business on a daily basis, helping businesses, supporting businesses, assessing and analysing a business plan and actually funding it. So our access to capital is a major problem. Coupled with the fact that traditionally we haven't been great in incentivising entrepreneurs and support in terms of seed capital. So for private equity to get involved in start-up businesses in this country is very challenging, and it's challenging for a number of reasons. Number one, if it doesn't succeed, well, there's a loss. But number two, if it does succeed, it is hard to capitalise that business at some stage down the road to take out your money. So in other words, there's no incentive for people to put money in with the hope that if the company grows and expands, that they'll be able to capitalise it at some stage in the future, or their equity, and move on. And that's what seed capital entrepreneurs need. They need to be able to do that. And that happens in the west coast of the States, it happens in the east coast of the States, it happens in the UK, it happens elsewhere. But we don't have that flexibility in this country. We don't seem to have that capacity in terms of policy development, and maybe also in terms of our history and our tradition of funding. We expect the state to do it all. But we do need to unshackle that element of private equity, investing in companies, being able to capitalise at some stage down the road and take out profit. Profit is not a dirty word. And the capital gains tax, for example, is an area that will have to be looked at in terms of small and medium-sized businesses. And I firmly believe that there's an opportunity now for us, to actually do that. When you look at the overall budget and the arithmetic of the budget, we're obviously obligated to comply with EU budgetary positions in terms of budget deficits. Equally, we need to be conscious of the fact that, as I said, there is headwinds facing the economy, and there's also major pinch points in the economy in terms of a lack of investment over a number of years in infrastructure. You can see that in evidence with our public transport systems, our roads, our third-level universities, Minister, and IT sector are under huge pressure in terms of trying to provide facilities and expand, to provide proper education and training for people. That is an issue that we just seem to be eternally incapable of addressing as a society. And how we fund third-level education in this country. And if we want to have the best graduates in the world, we have to have the best universities in the world. And if we don't face up to that, well, we're going to be forever moribund in mediocrity. And that is not something that I think we should aspire to. We should be beyond that, well beyond that, and ambitious. So that is the third-level educational areas and infrastructure. Housing has just been discussed, and I know now there's been simplistic solutions put forward to this House on many occasions, and I don't stand here thinking I have any grand answers this evening. But, Minister, we are absolutely failing generations of people by what is happening out there at the moment. Every day of the week, we have families who are now traipsing around the capital city, waiting for a phone call for emergency accommodation, officers to ring them to point out to a place where they can go that night. Traditionally, that would have been for individuals, single people, people with drug addiction, alcoholism, and many other illnesses and mental health issues as well. But it's gone beyond that. The traditional homeless sector that we would traditionally have seen in this country, it's gone well beyond that. We have families sleeping in cars, we have families sleeping in couches, we have families sleeping in vans, Minister. In vans. We have families sleeping in hotels. And we have families sleeping in bed and breakfasts which have to vacate at 10 o'clock in the morning, traipse the street until that evening again. That's what we have. I'm not criticising, I'm just highlighting. But the difficulty, of course, it has gone beyond just the issue of the traditional homelessness. It is now evident across the whole of society and the whole of the economy and every region. where people are now paying €2,000 a month to put a roof over their head in South Dublin. In Cork North Central, the constituency that I represent, you can pay anything up to €1,400 for a nice 2-bed or a 3-bed house in parts of my constituency. And the problem here, Minister, is what it is doing, it is taking money out of the family system that they should be investing in themselves. And I just don't think that people appreciate the impact that this will have and the storing up of problems it is having, because parents do not have surplus cash to invest in their children. The child who has reading difficulties, where maybe the parents from time to time might get some assistance for that child. The child with an abundant brilliance at music, but they can't afford to get piano lessons for that child. The child who would like to play football or hurling, but the pressure is on because they just don't have that money. Because what we are effectively doing is enslaving a whole generation of people to bricks and mortar again. We've tried it before, Minister, and it failed. And it is not going to succeed again. We now have a situation where you have to have 2 middle to high income earners living with mum and dad for a number of years before they get the deposit together, before they can even go to the market to contemplate buying a house. And from the day they buy that house, they're on a treadmill of misery to fund that mortgage for 20 years. And that's with interest rates historically low. Historically low. Even though we have the highest interest rates as a country within the European Union, historically the ECB rate is the lowest it has ever been. And that will not stay low for 20 years, I can assure you. Otherwise it will show that the European Union is failing as an entity, because there would have been no economic growth. But we will store up huge problems, because if they can barely afford to buy a house now with historic low interest rates, what's going to happen in 3, 4, 5, 6 years' time when interest rates start to rise across the European Union? So they go from 3.2% to 4.3% to 5.2% possibly. Who knows? But we know one thing for sure: they are not going to stay at historically low rate forever and a day. So if we have families who have 2 incomes coming in, who can't afford to buy a house in Dublin with historic low interest rates, what's going to happen in years to come? And it's almost foretold it's going to create huge problems. And in the meantime, there is no surplus money available to families to do the things that families should be doing, which is investing in themselves, investing, as I say, in the social capital of that household, lightening the burden of the state, investing in themselves so the state doesn't have to do it. But no, we will enslave them again for another generation. And this is not some ideological view I have. It is just the harsh reality of economics out there, Minister. And we're storing up problem after problem. You see it, I see it, and every deputy inside in this house sees it every week at their clinics, at meetings. No matter where you go, you'll hear people, my child, you know, Billy, I'd pay for it if I had it. But they don't have it. And the state can't give it to them either. So that is an issue, Minister, that has to be addressed. And just because you're there taking this budget debate tonight, I had written down housing, infrastructure, competitiveness and entrepreneurs as my budget speech. Now, when we look at the overall economy and what is happening, we have to accept that the changes that are required are coming too slowly for us to reposition ourselves. And where I point that out is particularly in the whole area of competitiveness. Our competitiveness is being undermined on a continual basis, Minister. And the most recent report shows that we have dropped to 23 in the ranking of competitiveness. So we're going down in terms of our competitiveness. And that should be setting alarm bells, because once you start to drop your competitiveness, other issues start to roll in then. Requirements for wage increases, further eroding competitiveness. Wage increases to fund mortgages. Wage increases to fund the rental sector. And all these things continually feed into an economy. Now, that's fine when the economy is rising as it is at the moment. But it will not always grow at the rate it is growing. And we know that for certain as well. At some stage, it will slow. And then you will be found out because our competitiveness has been eroded. And the competitiveness is significant in view of we don't know what Brexit will bring. We don't know what Brexit will bring with the United Kingdom, for example. I mean, a key issue here in terms of what will happen in terms of the negotiation tomorrow, that the Cabinet will see tomorrow in Westminster and here. If we're in the common travel area with the United Kingdom, which I hope we are, and that there is no barriers between trade between the Republic and the United Kingdom, equally that will mean that an Irish person can still work in the UK unhindered. And an Irish person can work in the European Union unhindered due to the free movement of people. But that will equally mean that our labour pool here has access to two markets. And in view of the fact that the United Kingdom may not have access to the European market anymore, it will mean that our labour pool will primarily see the UK as an area for employment as well. So our economy could be under huge pressure very, very quickly in terms of trying to keep skill sets in this economy. And if you look at all the matrix across all the skill sets, we're under pressure in every single one of them. Our apprenticeship rollout has been slow. The training programs that are required for the economy in terms of the key areas of construction, both commercial and residential, are light years behind what we need in terms of ramping up productivity and output. And again, we were very slow to acknowledge, like, I can remember in this house, you were still talking about knocking ghost estates when everybody else was saying, we need houses. Like, we didn't ramp up the apprenticeship schemes in time. We don't have enough engineers, we don't have enough architects, we don't have enough planners, and we certainly don't have enough construction workers across all the trades and all the crafts. So there's a huge lag there. And equally, if European labour is cut off to the United Kingdom, well then this economy here and the labour pool here will be pulled potentially to the United Kingdom as well. Now, I don't know what's in the text, but I certainly detect that that would be an issue that would be of concern. If the United Kingdom doesn't have access to the European labour market, but it has access to the Irish labour market because of the common travel area. So skill sets is a significant impediment to the economy's competitiveness in this country. So what I'm saying, Minister, is I've spent the last 18 minutes highlighting the problems, but I just feel it is important that we do acknowledge those particular issues. Finally, Minister, in terms of the infrastructure, I spoke about the national issues, and I have to speak locally as well for a moment. The North Ring Road is not on the National Development Plan, and it should be, Minister. The North Ring Road is the road that was envisaged to run from the Glamire bypass across the northern district of the city and joining the Southlink Road in Ballincollig. It's on plans, and that was a rough route. It is of huge importance that this particular road is developed in the short and medium term. And I'll tell you why, Minister, more than anything else. Not because it runs through the constituency that I represent, but because if anything ever happens to Jack Lynch Tunnel, which is now the only real link between north and south, we see huge problems and consequences. It can happen from time to time just with flooding, for example, or maintenance in the tunnel. The whole region comes to a standstill. So the whole region of South Munster, in terms of access to ports, to the airport, to hospitals, is completely now and utterly dependent on the Jack Lynch Tunnel. And if we had a circuitous orbital route, at least if something happened to the tunnel in terms of maintenance or a catastrophic accident, or even if there was some infrastructural problems with the tunnel, we would have a link around the city to serve it. And it would equally also bring some balance to the city, because all the development is on the south side of the city and we haven't just got enough infrastructure to invest and to encourage investment in the north side. So from that perspective, Minister, I would urge that you would look at that, and that would also assist in opening up the area to further housing development, which is something that we critically need as well in the constituency of Cork North Central.
Kelleher.
Thank you, Con Clorla.
Now that